Now, this all comes a day after the IRS said it would furlough nearly half of its workforce because of the shutdown, but they still put this out. Here now is Doug Flynn, certified financial planner, co-founder at Flynn Zito Capital Management. Remember we used to do Tax Tip Tuesday with you, very popular segment. So we have this on, what's today, Thursday? Anything stand out from what they put out?
I was just going to ask you how it feels to still be in the highest tax bracket, Connell.
I will. I'll let you know. I'll let you know.
Yeah, I think it's just every year they escalate the brackets with inflation so that theoretically if you get a raise, you kind of stay in the same bracket. Not everybody gets a raise every year, as you know, so that may not make much of a difference for them. But it does give you a little bit more room if you have income and you're increasing to not necessarily creep into the next bracket. But not much has changed other than that.
All right, good enough. I mentioned before the break that a guy by the name of Jamie Dimon, every time Jamie Dimon says something, it seems like people take notice on Wall Street. He does run the biggest bank in J.P. Morgan Chase. He's been around a long time, and sometimes he knows a thing or two. And now he's warning us about the stock market, higher risk of a serious fall in U.S. stocks than is currently being reflected in the market, is what he said in this interview with the BBC. He's far more worried than others are. What would you say?
Yeah, I don't necessarily disagree. I think what he's talking about is the valuations, and you kind of look at like 30-year averages of the market valuations as a measure, and we are much higher than that. We're about 30-some-odd% overvalued relative to that. And you're more than one standard deviation for the people who are into statistics, and so that gives you some pause, and I think that's where this is coming from. It also comes from, you know, we've just had the best summer in the market, or the second best summer in the market since 1950. So, you know, you had two great back-to-back 20+% years. This year's been great. So you get a little bit of complacency, and I think that's where the concern is. And so what happens, though, is you do have to put it in perspective. And if you go back 100 years, 25 of those 100 years, the market is negative. And so, you know, there could be another negative year. The last one was 3 years ago in 2022, when it was just under 20% down. And I think that's what he's looking for, is perhaps there's a big downturn coming. And so, as always, pro tip, at the all-time high, don't chase it. Don't put all your money in the market. Put some on the side and maybe wait for an opportunity. Only with money you're thinking that you need less than 10 years. 10-year plus,
write this down.
Don't
so
worry
you're saying
about
buy high, sell low. Is that what? Let me write that down.
Yeah, that's the exact opposite of what you want to do. That's what a lot of people do, though. When it's good and it's high, they feel good. Oh, I want to add.
Exactly. I get one more for you. Speaking of big names, Ari Emanuel, he says that he's making a bet. Okay, your time, because we're going to be working 3 days a week thanks to AI. It's like every day we have a story on AI. Sometimes it's the end of the world. It's taking 100 million jobs, and sometimes it's like, all right, this is great. We only have to work 3 days a week, and we can all play golf or whatever it is the other days. What do you say?
Yeah. Well, I think he's onto something from this standpoint. First, it would go to a 4-day work week before you got to 3. But, you know, where this comes from is if you go back to the 1800s, people used to work 6-day work weeks and 10 to 12-hour days. And it wasn't until Henry Ford came out with the 40-hour work week and didn't cut pay to do it. And it didn't become law in the U.S., the 5-day work week with 40 hours, until 1940. And so with productivity comes this thing where perhaps there's some morale boost and productivity enhancement. And this is another thing along that line. And so perhaps we can be just as productive, working less, get the same pay, and you know, have a better life overall, and that breeds more positivity and maybe even more productivity. So we go there first, and not every industry is going to be able to do this before you get to the 3-day work week. I don't know if we're going to see that anytime soon, but competitively, some companies will offer it, and then that becomes a recruitment and a retention tool versus somebody else who doesn't offer it. And so that's where it begins, just like Henry Ford did it, and it took a while before it kind of morphed to it. So I can actually see it, because AI, the more you do it and the more you prompt it, it's amazing.
Oh,
and
it's
so
unbelievable.
So that's what we're seeing.
It should make us more efficient, right?
Yes.
You know, whether it's Grok or anybody else, and Gemini, Perplexity, Claude, all these people, Doug.
Right.
No, you don't have any.
Just hopefully the companies don't try to extract every extra bit out of you on top of that. That's what this is. Maybe we can give a little bit back to the people so that it's better for everybody.
And nobody on our staff should be trying to take advantage of this. Oh, I used AI. I'm only coming to work a couple of days. Well, we'll be on to you on that one, too. Thank you, Doug. We'll talk to you soon. I know you won't put up with that. Never, never. We'll be right back. Quick break.